Markets are feeling the heat today as the US indices take a hit, rattled by a cocktail of economic jitters and trade policy noise. Despite blockbuster earnings beats from tech titans like NVIDIA and Salesforce showcasing revenue growth and some profit gains, their stocks are sliding, a sign that investor nerves are fraying. The VIX is going up, and also the fear and greed index shows that there is extreme fear in the market. Adding fuel to the fire, President Trump doubled down on his tariff threat yesterday, reaffirming steep levies for Canada, the EU, and Mexico, with deadlines looming just weeks away. It's a turbulent mix of stellar corporate results clashing with the macroeconomic uncertainty. So buckle up because this roller coaster is just getting started. Now, in this video, I'm going to show you some of the key economic data that has been announced by stocks such as NVIDIA, Salesforce, but also what is currently happening in the market today. I was looking at the markets, primarily the US, showing that the market has been declining, right? And also the other key economic data like GDP. And tomorrow there's going to be core PCE data that is usually the Fed's preferred indicator on inflation. So I'm going to walk you through that. And most importantly, what this data means for me as a trader and a retail investor and how I am repositioning my portfolio. So stay tuned and make sure you click the subscribe button so that you don't miss other episodes when I post again. So I have some notes and some data that I will show you. So let me just show you the first part of my presentation. So the other thing is today is actually my birthday. So I'm so excited that, I have been lucky enough to witness this in the market on my birthday. And the market smiled for me today. I made a few bucks on my trading today. So that is good. But for those who don't know me, my name is Isaac Jonas. And I think when I do these videos, I like to provide proper context so that at least people don't get misled. This video is just for educational purposes. I trade and invest as a retail investor in the US and Canadian markets, and I do so with my own money. I don't provide investment advice. And it is very important also to emphasize that trading and investing comes with risks, especially if you don't understand what you are doing. So let's dive in. The first thing is that I think my journey has been interesting for me because, like I said in the past video, I lost my job and I had to pivot and to find ways to make some income. And I'm glad I did that because right now, I'm confident, at least also, looking at my profit and loss in my trading and investing. But also, it's something that I'm so passionate about. I know I talk to a lot of people. Sometimes some people are not happy at their jobs and stuff like that. And it's sometimes a privilege to be able to do something that we are really passionate about. Because at the end of the day, some of these things may not generate income instantly. For example, this YouTube channel and even my social media blogging and writing for other various newspapers like the Business Weekly and the Standard in Zimbabwe, I don't get money directly, right? And I mean that to say it's a long-term game. That's something that I have realized. So the most important thing that I'm learning is that it's important to have some other income streams that can help you, at least whilst the business is growing, you're growing your audience, you can then be able to pay for the bills in the short term whilst being able to build long-term wealth. Like for me, I take some other long-term positions that I believe in the long term, I might be able to get some income and get some money from dividends and also trading, like I said. So that's important. And I like writing. I have a book on trading. I'm just waiting for the person I requested to write the foreword to complete that, and then very soon I will have it available. And I pretty much detail the insights, the experience, and how I trade profitably in the financial market. So that background for me is just to share with you guys so that at least you have an idea of who you are, the kind of person that I am. Now, today, when I checked the market on the pre-markets, because usually I wake up that I'm in Canada, British Columbia, and we are on Pacific Standard Time. So we are 3 hours from New York time, and I mostly trade in the US. So I monitor what's happening then the New York Stock Exchange and other exchanges there, like the NASDAQ. And I noticed that even though NVIDIA reported extremely good results, in my view, I think the market is now at a point where it's catching up with the reality that, this stock cannot continue to just grow and grow. So now I think the investors and traders, they are pricing in that. So even after the market, I remember I was talking to my Ango, who is currently actually in Zimbabwe. We trade together. Sometimes I realize that when I'm trading, it's very important to have someone who understands the markets as well to kind of like point out some potential blind spots. So we were discussing about this, and we were like watching NVIDIA like really dropping, and I'm going to show you in real time, and other stocks as well. And usually I like to use the S&P 500, which is broadly the top the 500 companies in the US that are publicly listed. They come from different sectors. So you see that when the time I took this screenshot, it was down, the S&P index, it was down 0.14%. But you see that most of the big stocks, tech stocks, and you see NVIDIA, it was down 3%, and Tesla was down 0.03%. And broadly, you can see that most of these tech stocks, they were down, right? But companies like Amazon, Apple, Meta at that time, but the last time that I checked, they were all red, right? In other words, they have been dropping. Usually, I like to have a long-term perspective. So if I look at the data, this is just a price point, let's say on a minute by minute basis. But if I look at the NASDAQ, which is the tech heavy index in the US, it has been down. I think now it's now getting closer to correction territory, right? And I was listening to Bloomberg, and they indicated that it's now down to where it was around November, right? So that means if you got in December, you are probably having a haircut at this point. So that stresses the importance of having a margin of safety. Now, the VIX is up and there's extreme fear. And what this means is that for me, I've been researching some wonderful companies, and I'm starting to open some positions for the long term, but I'm still largely holding a bit of cash that I use for trading. Now, this is very important because I think a lot of people sometimes they think that when the market is dropping, they are just going to jump into whatever stock comes up, and that drops with the expectation that is going to go up in the future. My experience has been that it's very, very important to understand the valuation of the company, who leads the company, and also, do you have a margin of safety? What product or service that they are kind of like producing, and also the macroeconomic view to say, you see, what is happening here? The US President Trump probably is using it as leverage, but he might levy these tariffs. So if you have businesses such as Apple, Tesla that have factories in China and also in other countries like Canada, where he's actually signaling levying some tariffs, there might be some repercussion. But in the short term, I think the geopolitical landscape and the markets are actually adjusting for this, right? So when I'm investing, I'm thinking 5, 6, 7, 8, 10 years or more. And it's extremely difficult to focus the future because there are a lot of unexpected things, right? So what do I do? Now, for me, I if I'm right in my decision making under that cloud of uncertainty now, that means I will be able to then make money. If I'm wrong, then I will lose money. So what I do is I'm conservative in my approach. I like to see companies that have a history of, increasing cash flows. And yeah, this brings me to some current earnings here of NVIDIA. But right now, for me, I'm not buying NVIDIA to hold for long term because I believe it's still high. Up there, I was reading an article by Professor in New York, Stern University, and he was indicating that his valuation for NVIDIA is currently, let's say, $86. So right now, it's trading at around 129 and stuff like that. So at the end of the day, I think the most important thing is to understand valuation, because you can still lose money if you get in wonderful businesses at an overpriced, at a high price, right? So that is very, very important. So you see that here when I look at the earnings for Q4 NVIDIA, they killed it. They really did well. They had revenue of 39.33 billion, up 78%, and their net income, as per the general accepted accounting standards, it was 22.1 billion. But for me, the key things that I look at, right, is like they have 80% market share, NVIDIA, and they are really, doing really well in terms of, having their products on demand. And like I said, revenue, actually now they are forecasting that it will go up by plus or minus 2% to about 43 billion, which is very, very good. It's growing, right? And their profit margin is like 70.6. So they are a market leader. They can increase their prices, and it's still very, very good. Now, here is the thing. What I see as something that is very important is to look at where would be the good entry point. I think for me, if NVIDIA really drops even further, right, maybe below 107 or maybe below $100, if something happens and it goes to that correction territory, I might consider, holding it for the long term. But right now, I'm exposed to it through QQQ and also other exchange traded funds like SPY that I own. And at the end of the day, for me, that's the way that I manage risks. And I want to get in when a stock is really down. So I'm hoping it's going to really go down. And you see, they also have a lot of free cash flows. You see, 43.2 billion. So 15.5 billion, they are free cash flows. But I like to look at the trend. So I go on line and find the data points to look at their trend. Is it growing? Is it dropping? Right? So if a business is like 15.5 billion in free cash flows, and they have cash and cash equivalents of like 43.2 billion, they have the money to expand, to grow, and big companies such as Microsoft, X, and all these other companies, even DeepSeek, they are also getting some orders. They are ordering some of their GPUs from NVIDIA, which is good. Now, is it something that is sustainable? I think for the long term, right now, their market share probably might, end up, dropping as other companies enter into that space. But for now, I'm not going to buy NVIDIA at this current price. Now, another interesting business that I look at is Salesforce. They reported their Q4 earnings, and they had revenue of 10 billion, and their sales were up by 8%, and service up by 8%. So it's really a growing business. But I think for me, what I like to look at, I like to look at the trend. But more importantly, I like to see the free cash flows. In this case, they have 3.97 billion according to this from alphastream.com. But also, I like to look at the long term. You see, Mark Benoff, the CEO, actually states that the company is well positioned to lead the customers through the digital labor revolution. So that's exciting stuff. And the stock was actually down a little bit and it's recovering, but the market is generally today it is down, right? So these are the things that I look at when I am considering investing in a stock. And uh, just a moment, let me. Now, another important thing that I look at, I mean, if I'm trading for the long term, yes, maybe the data might cause the market to drop really significantly. For example, if the Fed says something, or maybe the inflation data like core PCE, which the Fed usually looks at, or GDP drops. In this case, you can see that the consumer confidence actually dropped by quite a big margin in this case, right? It was at 105, right? So like that's about 7 points. And what this means is that at the end of the day, right, people are kind of like their confidence is waning. And what that means is it might slow down in terms of other revenue for those businesses that depend on those consumer insights. Now, initial jobless claims actually were actually higher than expected. The analysts they forecasted 222,000, but it came up 242,000. Now, GDP, it came as expected, which is a good thing, but it shows that the economy, the US economy in this case, is resilient. Now, the durable good orders, it went up higher than expected, so they are resilient. And this is for January, and this shows that there's a time lag, right? Now we are in February. So what do I see for me as an economist or as a retail trader, as a retail investor? The perspectives are different. Now, I like to think about how the big institutions are positioning themselves. For example, now when I'm investing, I am looking at the long term, right? So that is very, very important because in the short term, the prices might be very volatile. And right now, the fear and greed index, it shows that there's extreme fear. So what I'm doing is that the companies that I consider to be undervalued, that have very strong fundamentals, I'm starting to slowly open position. But in the meantime, I'm scalping and trading because it's very, very important for me to have free cash flows. I have bills to pay. I have to edit content and pay some of the costs of operating this business. Now, I make money like trading. So as a trader, when I look at this data, it's like there's a lot of uncertainty. So I'm extremely careful. I'm extremely conservative. I have a bit of cash, and I'm getting in and getting out because you don't know, maybe President Trump is going to say something about tariffs or something, and the market is going to really, really drop into a correction or a bear territory. Now, when I get to those levels, I get so excited as a long-term forecast investor because I then double down and start to add in positions of the stocks that I fundamentally believe from the data are wonderful companies. You see, Palantir at some point it was like 125 as an example, and now I was looking at it, it was $X. So think of it if you got in at that point. Tesla was like 485. Now it was trading at 280 today. So am I considering buying those stocks? No, not yet. I am just watching, and I'm exposed through exchange traded funds. And for those ones that track the S&P 500 like SPY, I'm just picking up some shares, whether one share or two shares, because I have a small account. But for me, I am really excited about the prospect of, preserving my capital, but also conservatively growing my account. If I can make 30% growth per year, even now, right now, from my trading, that's how I turbocharge my, my return on investment. Now, I also am thinking of actually if the positions that I like using options to uh, start to position myself for stocks that I'm interested in, like selling covered calls, or like selling uh, puts in this case, like for example, when I sell covered calls, for example, if I own 100 shares of Palantir and I am bullish, let's say it's at $80, I can open a position by selling one contract, for example, right? Let's say it's currently at $82, and then I can have a strike price of, let's say, for the next 3 weeks, 120. And if I get, let's say, $222 as the premium, I collect the premium. And what that means is if I open the position by selling that option contract, it means I get that premium. And if after, let's say, 2 weeks, it doesn't reach that, I collect the premium. But if it actually goes down, right, it's good for me, right? Then I keep the premium, right? But if it goes up, I miss on the potential upside. But at least I have that price if I got it in at a lower price than it is. I still have profit, but also I will have locked up my upside and downside. So that's the good thing about using covered calls. So I can get that. But for me, I like trading, swing trading, day trading. Like today, I was trading, I made some money. And what I do is I get in and I get out. That's it. And tomorrow is another day. When I wake up, I check on the economic data. Is there any data that is being dropped? What's happening? What are the top 5 things that are happening in the US or globally that are likely to cause the market to tank or to go up? And then I take positions, get in and get out, get in and get out. And that requires some skill. And if you like to learn more about that, please feel free to reach out to me via www.streetwiseeconomics.com, and I can teach you how to trade profitably, right? And again, the other important thing is to also have an emergency fund, because if you have an emergency fund, it means I am not in a hurry to make money. So I can take some positions, let's say a month or 3 months, if it then goes up, I make money, I exit, right? But if I really need the money, most retail traders, from my experience talking to some of my friends, they lose money because if you don't have an emergency fund, you see the stock is dropping in the short term, and you know very well that the fundamentals are strong. Sometimes people tend to panic because it's like, okay, it's rent money, it's money to pay for other bills, then it's going to probably go down. So the first thing is I want to have at least 6 months or more in terms of the basic living expenses, so that I don't have to make decisions just on a minute by minute to say, I have to get in and get out. The market is very unpredictable. It's extremely difficult to know the direction of the market with certainty. So it's about probability. If I take a trade, I'm like highly probable to say, okay, I have probability of 50% making it and 50% losing money. So am I willing to lose this money? So that's the question. So for me, I have some specific trading plans that I have. For example, I look at the relative strength indicator. I look at the stock. Usually if it has retraced to a certain level, the demand and supply zone, that's technical analysis, but also the economic data, the macroeconomic, to say, are these tariffs going to, if there is an announcement? And I also like to trade the volatility index through the exchange traded funds like UVIX. And those are the things that I spent time researching and understanding. So I thought I would just share this with you and provide my insights, but it's very, very important to understand that the market can continue to go down in the short term. Remember, the past 2 years, the S&P 500 returned about 24%. So that 24%, 24%, it's unusual, right? And I think about 68% of the time over the long term, the S&P 500 has been bullish, has been going up. But there's a chance actually that it can go down. Some years it can really, really go down. But at the end of the day, I like to have a hedged portfolio by having cash and also at some point holding the VIX. But the VIX, I like to trade it. If I see profit, I exit. That's something that has been a game changer in terms of my trading. I make money if the market is going up or down. I don't really care if the market is down. Like today, I made some money trading NVIDIA stock because it's down. And I do my analysis and I'm like, okay, now I think, it's a level to get in and get out, right? And I've tried my best to resist from trading options because I realized that my strength is in just trading shares, right? And particularly the leveraged ETFs, and only stocks that I understand, like NVIDIA. Yesterday I did a trade. I lost money a little bit. My loss was like $3.77, fortunately, right? But the thing is, I traded TSLL, which is a leveraged ETF for Tesla, right? And I had made some money on NVIDIA, but the net effect was that I had a loss of $3.77. And today it's my birthday. I'm doing a lot of things, but I did, trade, and I made about $120. For me, it's good, right? Because it's US dollars. I didn't lose money. I preserved my capital, and I was just, scalping, and that's fine with me. At the end of the day, the most important thing when I'm trading is I want to balance the risk of losing money to making money. So if a lot of people, the reason why they lose money is like they make money, and then do one terrible mistake. Like I did share with you guys, if you are following my channel here, that I did a trade on paper, which it was against my rules, and I lost like $213. It took me time for me to recover that. Of course, fortunately, I had made money in other accounts except that account, margin account that I was trading, right? So in net that day, I was profitable. But it's kind of like annoying, but it's the reality. If you are trading, it's possible. But if you can minimize your losses, like if I can make $300, $500 a day, and then when I lose, maybe I lose $5, $20, net, it will be positive. That's the very important thing that I've seen when I'm trading. And it requires some skill and understanding what you are trading. So I thought I would just provide this market update. A lot of people, they're saying, oh, the market is dropping, the market is crashing. I don't know if the market is going to continue going down or up. But what I do as a trader and as a retail investor is, regardless of whatever circumstance, my portfolio right now, I am growing it, right, by trading, right, and adding more shares for the ETFs that track the S&P 500. This is not investment advice with the long-term outlook. But for the short term, I am trading and making money, right? I'm trading, making money, taking some of the profits, and then investing for the long term. So I don't really care for the most part if the market is going up or down. What I like to see is I like to make money in the present and make sure that by the end of the year, God willing, I will have grown my portfolio. I was showing you that last time, my other margin account that I share with you guys, it was like up almost like 11%, right? Versus the S&P, maybe it was like less than 2%. So I'm beating the S&P 500, at least for now. But the thing is, things can change. So if I can consistently, let's say every month, like I grow my portfolio by 10% trading, right? And then taking those profits, investing for the long term. And then I will get to a point now, I'm gonna be doing covered calls to then say, if there are stocks that I'm following, I'm researching on, and I have quite a number of them, you can reach out and subscribe on my Substack, or reach out to me if you want a list of those stocks that I've been researching that I think are wonderful business. Again, it's not investment advice, but I spend time trying to understand these businesses, their free cash flows, who are the leaders, is there a margin of safety? And I want to start doing covered calls. The challenge is that a lot of people, they don't have as much income because, for example, if you want to write covered calls for Microsoft, let's say it's trading at $399 or $400, it means for 100 shares, you need 40,000, right? So if you want to then make meaningful money, let's say you should have maybe 300 or so, then if you are writing like covered calls for 3 weeks, then probably you might get maybe $1,000, right? It's not really a lot of money, but it's good if you can make 1,000 from covered calls. And these are, if they are stocks that I want to hold for the long term anyways, it's lowering my cost basis so I can have that, and then I am trading, I'm making some money, right? And I can also get some dividends. So that's the key thing, having free cash flows and growing the account, at least in my investing and trading strategy. I hope you found this video helpful. If you have any questions, feel free to reach out to me so that we can have a tete-a-tete. Have a wonderful day. And like I always like to say, trade and invest wisely, and may the markets be on your favor. Bye-bye for now.